Marc Lichtenfeld is out with a new teaser called the AI Energy Miracle, and he's pitching nuclear stocks that he claims will 10x. I reveal each one in this video for free, so you don't have to buy his newsletter. Also, no paid or proprietary information is given away. It's all guesswork based on public information. There's lots of stocks to uncover, so we're just going to jump into things. Here's the clues for the first stock, titled America's Premier Uranium Mining Company. This first stock trades for just a couple of dollars per share, yet it is the only uranium producer in America with more than one operating mine. Just in the past year, they've brought 2 new production sites online in South Texas, with 5 more expected to come online over the next 2 years. I believe, because Trump will make it a top national security priority to develop our own uranium, this will become America's go-to uranium company. It could become even more important than Cameco, which climbed from $10 to nearly $60 over the last 5 years. This is Encore Energy Corp, and the ticker is EU. Encore Energy is a US-based uranium mining company focused on developing in-situ recovery ISR uranium projects to supply fuel for nuclear energy. Here are the top 5 things to know about this stock, and I'll tell you if I'd buy after. First is US uranium pioneer with 2 operating ISR plants. Encore is one of just 3 US uranium producers and the only one operating 2 in-situ recovery ISR plants, Rosita since November 2023, and Alta Mesa since June 2024 in South Texas, making it a rare pure-play uranium name with established production. ISR offers lower environmental impact and cost advantages, positioning Encore well for scaling. Second is revenue still climbing, but losses linger. FY 2024 revenues surged to $58 million plus 163% year over year, largely from uranium sales and extraction ramp-up. Despite that top-line jump, the net loss widened to $61.3 million, minus 34 cents per share, reflecting heavy exploratory spending and US GAAP shifts. Q1 2025 reported cost savings in extraction, yet they're still not cash flow positive. Third is high stakes in regulation and licensing. May 29, 2025, Encore obtained a radioactive materials license for its 3rd ISR project, Upper Spring Creek, and started construction. They also sold off non-core New Mexico assets in April-May 2025 to streamline focus. ISR projects require tight permits. Regulatory delays could shift timelines or inflate costs. Fourth is investor lawsuit, governance under scrutiny. In early May 2025, a securities class action was filed over alleged financial reporting issues and a leadership shakeup. Although not uncommon for mining juniors, these proceedings could distract management and hit the balance sheet if settled. Fifth is uranium market tailwinds meet volatility risks. Encore sold 720,000 pounds of U3O8 in 2024 at an average price of $81 per pound, leveraging rising uranium spot prices. With US clean energy sentiment and upcoming nuclear builds, they're in a sweet macro niche. But uranium pricing remains cyclical, and shifts in nuclear policy or global supply demand could swing margins sharply. Encore is pretty beaten down at the moment, but I'd probably wait until the finances look a little better before jumping in. Here's the clues for the second stock, titled The One Company Set to Dominate the New SMR Market. The second stock just signed a deal with the Department of Defense to develop the world's first mobile small nuclear reactors. These could pop up next to big tech facilities all over the country. And keep in mind, the company that developed this type of tech in the UK jumped from 80 cents to $7 in just 2 years, a nearly tenfold increase. The stock being pitched here is BWX Technologies, and the ticker is BWXT. BWX Technologies, Inc., is a public American company based in Lynchburg, Virginia, that designs, engineers, and manufactures nuclear components and fuel for naval and commercial reactors, supports environmental remediation and nuclear medicine, and develops advanced and small modular reactor technologies. Here's the top 5 things to know about this company. First is momentum and earnings on fire. BWXT's stock has surged, recently hitting all-time highs and earning a relative strength rating in the high 70s-90s percentile, signaling strong price momentum. Q1 2025 EPS grew about 20%, with GAAP earnings at 0.82 and adjusted EPS at 0.91 on revenue of $682 million. Analysts are now forecasting about 16% annual EPS growth, above market average. Second is deep mode in nuclear infrastructure. BWXT is the only fully integrated North American nuclear supplier, from concept through manufacturing, supplying reactors to U.S. Navy subs, commercial utilities, space, and medical sectors. Recent $1.2 billion per year Canadian contract adds a major non-U.S. revenue stream. Expansion projects in Canada and micro-reactor work in Wyoming underscore its strategic positioning across the nuclear value chain. Third is heavy debt load, risk, and leverage. The company carries over $1.1 billion in long-term debt, leading to a net debt to earnings before interest, taxes, depreciation, and amortization around 2.9 times. While interest coverage is strong, Cash conversion from EBIT to free cash flow remains weak. Keep an eye on whether its high growth can maintain fiscal health, and how new acquisitions like Connectrix are funded. Fourth is diversification beyond defense. Though defense naval is core, BWXT is expanding into medical isotopes, clean energy, small modular reactors, and uranium initiatives, with initiatives like Oak Ridge centrifuge experiments and medical nuclear campus launch. These moves could hedge against potential defense budget cuts and tap high-growth sectors. Fifth is betting on the nuclear renaissance. BWXT is one of the biggest pure plays on the global resurgence of nuclear power. As the world looks for clean, reliable energy to power AI data centers and reduce carbon emissions, nuclear is back in focus. BWXT is building next-gen reactors, including small modular and microreactors, and has early mover advantage in what could be a $1+ trillion long-term global shift. If nuclear truly makes a comeback, BWXT stands to benefit in a huge way. I personally like BWXT a lot and think it's one of the smartest nuclear plays. I consider this stock a buy and a good long-term stock. Here's the clues for the second stock, titled The Number One Nuclear Provider in America. The third stock is the strongest nuclear operator in America, with 2.5x the capacity of any other competitor. The company operates 21 nuclear units across 12 sites, with 21 gigawatts of baseload power, but it has more customers than it knows what to do with, including huge tech giants like Microsoft. The company reports at least 50 gigawatts of data center growth, more than double their current output. It just smashed earnings already, and I believe it has much bigger growth ahead. This stock has 1,000% potential during Trump's second term. This is Constellation Energy Corporation, tick CEG. Constellation Energy Corporation is a publicly traded Baltimore-based energy company that, since splitting from Exelon in 2022, has become the nation's. Here's the top 5 things to know about this company. First is Meta Mega Deal, a game changer for nuclear energy. CEG scored a 20-year power purchase agreement with Meta, supplying 1.1 gigawatts from the Clinton plant starting June 2027. This deal not only preserves that plant and its zero-emission credits, but could also pave the way for more tech nuclear partnerships. Big win for nuclear credibility and long-term revenue stability. Second is solid Q1 and dividend. Momentum is building. Q1 2025 saw adjusted operating earnings surge to $2.14 per share versus $1.82 year over year, with nuclear capacity utilization at 94%. The company reaffirmed full-year EPS guidance of approximately $8.90 to $9.60. Plus, they recently boosted their quarterly dividend to $0.3878 per share, supporting a approximately 0.5% yield, solid for income investors. Third is valuation mix. Growth versus entry timing. With $24.2 billion in revenue and $6.55 billion in earnings before interest, taxes, depreciation, and amortization, analysts project 13% plus EPS growth through 2030, thanks to nuclear tax credits and assets like the Clinton deal. However, some suggest CEG is trading above fair value, so timing your entry wisely could mean a lot. Fourth is fuel and market risk, the volatility factor. Analysts caution that exposure to gas, uranium, and broader energy markets introduces volatility. On top of that, CEG benefits from federal subsidies, which could roll off or change and impact profitability. These are key risk factors to consider. Fifth is healthy but leveraged. Debt and credit outlook. CEG carries a BBB plus credit rating, investment grade, with approximately $7 billion in debt maturing over the next several years. Free cash flow was strong, $3.7 billion in 2024, but ongoing heavy capex, like the Calpine acquisition, means refinancing may be required. Keep an eye on interest rate sensitivity here. CG is pretty expensive at the moment, but I do like the company. I would just wait for a dip to buy. Mark has 2 bonus stocks he's pitching as well. Here's the clues for the first one, titled America's Strongest Natural Gas Dividend Company. Natural gas should also be a very big winner as America continues to need more energy to keep up with the AI build-out. This company liquefies 30 million tons of natural gas through 6 liquefaction facilities and then distributes it to interstate pipelines throughout the country. The company brought in $9.6 billion in revenue last year, with profits of $4.2 billion. That's a stunning 44% profit margin. That's why they're able to pay a massive 7% dividend yield and grow it each year. This is Cheniere Energy Partners and the ticker is CQP. I'm not really a fan of Cheniere, and if you want a natural gas stock, I would go with Energy Transfer. The last stock is titled the AI Income Trust. Mark says, our last stock is the most direct play on the data center build-out. It operates a total of 260 data centers in 71 cities across 33 countries on all 6 inhabited continents. Its data centers are used by more than 10,000 companies, including 55% of the Fortune 500. Over the past 10 years, revenue has grown at a compound annual rate of 13.5%. That has allowed the company to raise its dividend every year for the past 10 years. This is REIT Equinix, and the ticker is EQIX. I think this is probably a good long-term bet, although the stock is priced to perfection, so don't expect any massive returns. Best case scenario, this edges out the market. And don't forget to click the link in the description to check out AlphaPick. Right now, they're running their biggest sale of all time, and you can get $100 off this amazing service. Remember, I've reviewed over 100 stock picking services, and this is the only one that consistently beats the market, nearly tripling the returns of the S&P since inception. So again, make sure to click the link in the description and get $100 off this incredible deal.